Hi, my name is Marty Straka. I'm a mortgage loan specialist. I've been in the mortgage industry since 1990. And what we're going to do here is just run a few questions back and forth. Think of it as a pop quiz, if you will. And I want to try and provide information that will be helpful to you while you're considering getting a mortgage or purchasing a home. So let's get started.
Great. About how long does it take to obtain a loan approval?
A complete detailed mortgage loan approval process in today's market typically runs about 30 days, in some cases as long as 45. In order to properly get your loan approved, we have to verify all of the information that's given at the time of the application. Now, this is real important. The more detailed information that you provide up front in the application process, the faster your mortgage can be pre-approved. But we still have to allow time for things like appraisals to get done and certain verifications to come back. And then once we have all of that information, we have to allow some time for it to get through the underwriting department so that we know that we have a pre-approval or a mortgage commitment that's actually useful to you. But 30 days on average should be able to take care of it for most people.
Okay. About how long will it take to close if I applied for my mortgage through a pre-approval program?
Well, getting pre-approved is an excellent way to cut down on the time, and the quality of your pre-approval is what's going to determine how much time it saves. If when you get pre-approved for your mortgage loan, you're providing your 1 month's worth of bank statements, your 2 months worth of bank statements, your 1 month's worth of pay stubs, W-2s, tax returns, if you bring all of that documentation up front during the pre-approval process, then that's the first 5 to 7 days of delays that often slow things down in the loan. Now, once your application's in the system, we are required by federal law to issue out certain disclosures to give you time to review those. And then at the same time, we have to order the appraisal, verify the process, etc. But if you provide proper documentation right up front, you can knock 7 to 10 days off that pre-approval to mortgage commitment time frame.
That sounds great. If I refinance my loan with my existing lender, will I have to pay all the closing costs again?
Well, the answer is yes. About the only difference, a refinance is actually still a brand new mortgage application. You're recreating or refinancing a whole new purchase transaction. And the only thing that's not really involved is any upfront transfer tax costs that might be involved in your area. You typically can get some sort of a small discount on the cost of the reissuance of the title insurance, but the actual closing costs to create a refinance transaction are virtually the same in most cases as to what it is to purchase the property. Now, some lenders will talk about either having no upfront closing costs or having reduced closing costs. But the truth of the matter is that the closing costs are there, and they're typically either going to be paid for you up front, included in the actual loan itself, or built into the interest rate of the loan by the lender so that it's less cash out of pocket for you, but you may not necessarily be getting the lowest rate that's actually available in the market that day.
So will a lender agree to include my closing costs in the loan amount?
They can in many situations. Now, again, the costs are there. The closing costs have to be paid because they're mostly paid to third-party people. They're not paid directly to the lender. But the lender can often increase the interest rate by 1/8% or 1/4% and then use what they call the yield spread from that increase in the interest rate to offset the closing costs so that it's not an actual dollar amount out of your pocket. The second thing is that if you have enough equity in your home, and let's say that your house is worth $300,000 and you want to borrow $200,000 and your closing costs are $3,500. Well, instead of borrowing $200,000, if you borrow $203,500, you've effectively rolled your closing costs into your loan.
I've been able to find a really great value on a house. How quickly can you close my loan?
Well, in today's market, the general rule of thumb is between 30 and 45 days. Now, in a perfect world, can we shorten that time frame? Yes, but it sure does put a lot of stress and strain on everybody in the transaction. When you're completing a home purchase, you should be thinking 45 to 60 days is a comfortable time frame. 30 to 45 days is a tight and a quick time frame. Anything less than 30 days is absolutely an exception, and you're really going to need to work closely with your loan officer every step of the way to make things get done quickly.
Okay. Can I close on a home without having to be at the closing table?
That's a legal question. I'm not a lawyer and I don't play a lawyer on TV. But in most cases, with the lender's approval, and that's important, you may be able to complete the purchase under what's known as a power of attorney. And that's where you're actually assigning the authority for somebody else to complete your loan documents. Now, most lenders are still going to require you to sign off on some very specific documentation. And your power of attorney letter has to be very specific on the property address, the loan amount, the interest rate, the monthly payments. Everything needs to be spelled out in that power of attorney for most lenders to consider accepting it. We don't want you to be deceived. We don't want you to be financially obligated for something that somebody else signed on your behalf. We want you to understand what you're getting involved in. This is a real commitment.
Okay. About how much money will be required at closing?
Well, that's going to depend on the terms of the loan that you're looking at. What I tell most clients, especially when I'm dealing with first-time home buyers, a first-time home buyer is typically going to be looking at an FHA insured mortgage. And an FHA insured mortgage requires a 3.5% of the price of the home down payment. Then in addition to that, in New Jersey, which is where I work out of, you have closing costs and tax escrows and things that typically equal about another 3% of the price of the home. Now sometimes you can get the seller to help pay for those. So on the low end, you're going to need about 3.5% of the price of the home to 4% of the price of the home. And on the high end, you're going to need somewhere around 7% to 8% of the price of the home. So on a $200,000 house, you might need $16,000 to complete the purchase, but you also might be able to get into that same home for as little as $8,000.
Do I have to have title insurance?
When you're financing a home, you absolutely have to have title insurance. Title insurance is a very important protection for you and for the lender. And what it does is it guarantees that nobody else can place a lien or claim against that property based on something that's happened in the past. So yes, you do have to get title insurance if you have mortgage financing. Even if you were paying cash for the house, it would literally be almost crazy to think about buying a home and not getting a title insurance policy to protect you. Can you imagine investing $200,000 in cash to pay for a home, not spending $1,500 or $2,000 for title insurance as a one-time cost, and 3 years from now have somebody come up and lay a legal claim against the property saying you don't have rightful ownership? Yeah, it's happened. So title insurance is important and you absolutely should have it.
Okay, well, what type of homeowner's insurance requirements would I need to meet at closing?
Well, most lenders have some very specific policies, and you're going to want to review those with the lender, but you do want to have a homeowner's insurance policy that protects you against proper and limited liability issues, should have a 100% replacement cost as a rider on the home. If your house were to be completely destroyed by a fire, a flood, a hurricane, or some other natural disaster, you want to make sure that your policy has enough of a premium built into it that they're going to absolutely, completely, 100% rebuild that home. Homeowners insurance is very inexpensive when compared to all the other costs involved in home ownership in the rest of your life. For a matter of $400, $500, $600 a year, you want to make sure that you've got a homeowners insurance policy that'll rebuild that house and properly protect you. It's so inexpensive, it's not a place to cut corners. Get the right coverage.
That's some great information. If I've got some follow-up questions, what's the best way to reach you?
Well, the easiest way to reach me is with my cell phone. I keep my cell phone with me all the time, and I cheerfully accept phone calls anytime after 7 a.m. up to 11 o'clock in the evening. My cell phone number is 973-598-5006. I'm Marty Straka, happy to answer your questions and looking forward to helping you.